What's up everybody, my name is Jaspreet Singh and welcome to the Minority Mindset. So a little while ago I posted a video called my worst real estate deal ever, where I showed you guys a bunch of mistakes that I made. In this video, I want to take you through a property that just been vacant, the lease just expired, which is a much better deal. Now this isn't really my best deal, but it's a very good one. So I want to show you some things that you should do, because in the last video I showed you a bunch of things that you should not do. So let's take a look inside. Alright, so this property is located in a suburb of Detroit. It's actually a really nice area. It's a corner lot, and the reason I wanted to invest and buy in this particular area is because when I was researching locations and neighborhoods, I saw that Walmart was looking to open up a super center like less than a mile away from here. It's like walking distance from here. So I knew that if Walmart wanted to invest here, that must have meant that they've put in months and months of research. I think they spent like 6 months of research before they opened up a store, and they must have spent tons of dollars trying to figure out where they want to invest. So if Walmart wants to come here, I figured this would be a good location, because that means there's going to be more jobs and other businesses that want to come here. So that's why I wanted to invest in this particular location. This deal, so I bought this property again during the recession. That's when I really started getting into real estate investment. You know, it's partially luck, even though I don't really believe in luck, but this was really kind of just where I got super lucky, where I started investing in real estate when the recession was in full effect. So properties were, selling for cents on the dollar. There was like, honestly, properties selling for 10 cents on the dollar because everybody just wanted to sell. So this particular property was owned by a real estate investor who was involved in fixing and flipping. He was a flipper. What that means is he would buy properties and then he would renovate them and then he would sell them for a higher price, and that would be how he made his money. So the guy that owned this property was involved with a handful of fix and flip deals. He had a mortgage on his properties, and when he owned this one and a couple others, the market crashed. So he wasn't able to sell the property for the price that he wanted, and so he started running into problems. He didn't have money to pay his mortgage payments. All these things happen. And so then he's on the verge of foreclosure, and at this time, banks are just foreclosing left and right? So banks don't want to foreclose because they lose money when they foreclose, especially when the market is in a recession like that. So that's when we came along, and we were like, okay, let's see what we can do, because I knew this was a good area. This was a pretty decent property. He had some work done, but it wasn't completely done. Like the floors, when we bought this property, were like not done. There was no flooring in here. There was a bunch of things that were kind of half done, but it had good bones. So we started negotiating with the bank and the seller. This was what's called a short sale. So a short sale is different than a foreclosure, because a short sale happens before a foreclosure actually occurs. So a foreclosure is when the bank, once you stop making mortgage payments, the bank is going to take back your property. The bank takes the ownership of your property, and then they sell it for a cheap price. That's what a foreclosure is, because the banks just want to get it off their books. A short sale is when you work with the seller and the bank before a foreclosure happens, and the bank agrees to discharge the mortgage, to get rid of the lien at a lower price than what the lien is. So if there's a $100,000 mortgage on the property, they're willing to get rid of the $100,000 mortgage for $80,000 just because they want to get it off their books. So at this time, you were getting insane deals. We ended up buying this property for like 20 cents on the dollar. I think there was like a $150,000 mortgage, and we ended up buying this property for around $30,000. So, it was a good deal. It was a very cheap price because of the situation. I was very lucky in that I started investing during that time. But because it was such a weird time, this investor also had a contractor that was doing work in the property that he wasn't able to pay because he just didn't have the money, right? All these things were going on. And so that contractor also put a lien on the property because he wasn't paid. And what that means is he essentially was like, well, I haven't gotten paid, so when this property sells, I need to make sure I get my money. Well, that's an interesting situation when the bank's not getting paid enough, the seller's not getting paid enough, the contractor wants money too. So then we had to negotiate with the contractor as well to pay off their lien. But we knew that the seller needed to sell this property, because if he didn't, he was going to go into foreclosure, and that would be just a much bigger mess for him. So he wanted to go through with the short sale bad. And I mean, he would do whatever it takes. And so we said, look, we'll pay a few $100s for your contractor's lien, but you're going to have to pay the rest, because otherwise you're going to go into foreclosure. There's no buyers out here in this market. Nobody's buying. And so, you know, that's, you don't have any other option. And so we had to agree. And he did. So, you know, we had to pay a few $100s for that contractor's lien to make sure that gets off. We worked with the bank and renegotiated hard with the bank, because it was the same thing. We're like, look, bank, if you don't do this short sale with us, you're going to spend a lot of money going through the foreclosure. I mean, the foreclosure is not cheap for a bank, and you might not even be able to make this $30,000, because at that time, everybody thought the world was going to end. Like, it was crazy insane. And you know, I'm really seeing how crazy it was now, but nobody knew what was going on. So banks just wanted to get rid of everything they had. So they were willing to sell things for 20 cents on the dollar, 10 cents on the dollar, just to get it off their books. And so the bank agreed to it. And so that's what we did. We bought up the property, and then we spent $5,000 or $7,000 doing the renovation, and then we rented it out. We started renting it for about $850 a month. And so, you know, I want to take you through some of the things that I'm glad that I did, kind of show you the things that I did right, because in the last deal I showed you everything that I did wrong. So again, the contractor that we had do the work here, he was a licensed contractor. Never work with an unlicensed contractor. If you haven't seen my video, my worst real estate deal, you'll see exactly why. Watch that. Second, prior to buying this property, I had my city inspector, I had the city inspector come out, and I had my own private property inspector come out to check the property and see what needs to be done. Because, you know, I don't want to run into issues where I find out that, you know, this property is gonna explode, the foundation is crumbling or something like this that I can't see with my eye. So I wanted to make sure I had the right inspectors out here to tell me everything I need to know about the property. So all of these things came out pretty good. You know, I saw that there was some work that needed to be done, but you know, it wasn't anything super crazy, so we did that. Then the second thing I did was, when we started renovating, we redid the kitchen. I mean, it's not a huge kitchen, but the cabinets were like 1970s, all pitch black, ugly cabinets. And so, you know, we put in a nice looking cabinet to make it more appealing for tenants. There's two things that you really want to put your focus on to attract your tenant: the kitchen and the bathroom. Those are two places where tenants really look for nice things, because you know that can really make or break a deal. So if you're gonna put money inside of your home, your kitchen and your bathroom are two places to do that. Second, now when I'm looking for other places where I can increase my rent, the next thing I did was I installed stainless steel appliances. Let me show you right here. We got a stainless steel fridge and a stainless steel oven. Oh, you can't see it, but yeah, stainless steel from the front. Typically, so there's only two stainless steel appliances in this property, but typically for me to upgrade regular appliances to stainless steel, it's gonna cost me about $2,000. Why would I wanna do that? Well, if I spend that extra $2,000 on stainless steel appliances, I can typically charge between $25 to $30 more a month in rent. So that equals what, like $300 or so a year, right? So if I can spend $2,000 up front, I will be able to make an additional $300 a year. That's useful. That's what I want to do, because that's a 15% return on my money, just because I bought those stainless steel appliances. You can compare that to the interest rates you get in the bank, right? Banks are paying what, 0.03% a year in interest, 0.1% if you're lucky. And so, you know, just stainless steel is giving me 15%. So those are the type of things you want to do. The other thing that we did here was we installed an air conditioning unit. Air conditioning is the same thing. It's around $2,000, $2,500 to install. You're gonna make another $30, $35 a month by having air conditioning, because that's what tenants want, right? And so you're gonna make a better return on your money by doing these type of things, these renovations, to have an actual ROI, return on your investment, because that's what tenants want. So two places you really wanna look is your kitchen and your bathroom. Second, so when we first bought this property, we were renting it out for $850 a month. That was giving us right around 15.5% return on our money every year, because all in we were right around $37,000, right? $30,000 to buy it, plus the few $100s to the contractor fees, closing costs, and then renovation, right around $37,000. Well, you know, with $850 a month minus all of our expenses, that was getting us around a 15% return on our money, which is great. Now, the Walmart has opened up, it's brought a lot of jobs, and the Walmart actually brought in a whole bunch of businesses, because what I didn't realize when they were opening up this Walmart was that they were opening a huge like strip plaza mall type thing, and so they brought in a bunch of small retail stores and boutique stores, and so now this rent has bumped up to $1,100 a month, because now a lot more people want to live here. So what originally was about a 15% return on our money a year has gone up to 17 or even 18%, it might be, a year on our money. So that's why, you know, your location really matters. You know, location, you hear these things a lot, but what that really means is you want to invest where people are wanting to live, not necessarily where they want to live now, but where they're going to live. Where are people moving? Young people especially. Where are young people moving? Where are jobs going? Those are the type of places you want to look. And for the most part, those are actually urban areas. You want to look for downtowns, places where young people are going to want to be in the next 5-10 years, because real estate is not a 6-month investment game. You're looking for 5 years, 3 years, 10 years down the road, where businesses are looking to move. You want to invest in the future where people are looking to be. That's how you're going to make your money. There's two places where you really make money in real estate. One is your cash flow, the money you make from rent every month, and the second is your appreciation, the property value increase, right? I typically don't really factor in appreciation that much when I'm looking for a deal. The most important thing for me is my cash flow, the amount of money I'm going to make for rent each month and each year. Because if it doesn't make sense with the cash flow, if the rent doesn't make sense, I'm not going to do the deal just hoping the property values were going to go up. This is what I learned from that recession, is you can't predict when a market is going to necessarily crash. Yeah, you can get an idea, but you'll never be able to predict the top. So just hoping that a property value is going to go up is speculation. I do not believe in doing that. You know, yeah, property values going up is great, but I look at it like it's icing on the top. We bought this property because, one, I knew that people wanted to move here, so rents were gonna go up, and two, using the numbers and the prices that we were getting, we were gonna get a 15% return on our money, which is a lot better than you can get in the bank, right, or a lot of other investment places. So that's what enticed me to do this deal. Now, this property is worth almost or right around $200,000. You know, from $37,000, $40,000 to $200,000. So yeah, you know, the appreciation is great, but you know, it's also bringing in money every single month. That's the great thing about real estate is, you know, you really can control the asset, right? Because I can decide how I want to take care of my property. I can decide, hey, I'm going to put in stainless steel appliances. Hey, I'm going to put an air conditioning unit. Hey, I'm going to build a driveway. I'm going to do these things to make my property better. I'm going to take care of the property my way, as opposed to other investments where, you know, you don't necessarily have that control or freedom. And the second thing that's really cool about real estate is you get that rent, right? I mean, you can get paid every single month if you have a tenant in here. And so, you know, there's a lot of advantages to that. And so I guess let me just take a step back and talk a little bit about economic markets. Every single industry, every single niche, whether it's the stock market, the real estate market, they all follow economic cycles. It goes like this. There are times when the industry, the market, the economy is going to be strong, and there's going to be not so strong, right? It's a boom and bust cycle. This is a part of economics. It happens. This is not like speculation. This is not a conspiracy. This is fact. This happens. You can look at any industry, look at the market charts. And so you want to buy when the market is low, when everybody is selling, right? We got lucky where that's when I started investing, is when everybody was selling. I didn't know that at the time. I just, I was like, okay, well, let me start investing in real estate. And it just happened to be the time when everybody was trying to get rid of their property and properties were selling super cheap. But that's when you want to buy, because everybody's running away, and so you can get properties at a much better price, or investments at a much better price, because everybody's trying to get out. Supply and demand, right? Because there's just so much supply and not enough demand to buy. And so, you buy it then, you put in tenants then, and you start making money through your rent, and then you just ride the wave on the economic cycle. You ride it up, right? And even if the property stays flat, the price still doesn't go up, you're still making money from rent, right? That's the way I like to do my deals, is value it based on cash flow rather than speculation or, appreciation that might happen. You can never predict how much appreciation is going to happen. So that's why I like to look at appreciation kind of like icing on the cake, right? If it happens, great. If it doesn't happen, whatever. I'm still making my money. Another thing that we did to help with cash flows is, so you can see the flooring right here. This is it looks like hardwood, but it's actually a laminate. When I first bought this property, we actually put a carpet in here because carpet is cheap, right? But the issue with carpet is it gets destroyed pretty easily, especially when you have tenants moving in and out, and if they're not taking care of it that great, the lifespan of a carpet isn't as long, and then every time a tenant moves out, even if you don't have to replace the carpet, you're gonna have to deep clean it, so there's a lot of maintenance cost to a carpet. We put this laminate, which looks like a hardwood. It's actually a really nice laminate because it's waterproof as well. That's an issue with hardwood, is it can have issues or cause problems if it gets wet. This is a waterproof laminate, so even if you spill water on it, it lasts. The great thing about it is your maintenance costs are like significantly reduced because it doesn't scratch, it doesn't get broken that easily, and even if you break one piece of it, we can replace that one piece, so you don't have to replace the entire carpet or the entire flooring just because one thing happened. And so now, so every time a tenant moves out, I don't gotta replace the carpet or do that deep cleaning. I just gotta sweep up the floors. So it saves a lot of money in the long run by doing things like this. Again, you also want to have a property management company that does the work for you, because you don't want to be the person who's running the property and dealing with tenant phone calls and doing all this stuff. You want to be an investor who's focused on finding more real estate investment deals, who's focused on growing their money, not doing the day-to-day stuff. You don't want to be the person sitting there fixing the toilet at 2 a.m. on a Thursday. It's not worth your time. You can hire a property management company who's going to handle all of that stuff. So, recap. Some things that you need to do. I know I talked about a few of these in the previous video, but again, I want to really reiterate, always work with a licensed contractor. Get the city involved early, because you need to get a city rental license in some areas, but you need to let them know that you have an investment property. So get the city inspection out there, make sure that you pass those city inspections. Get your own private property inspection. That way you know what work needs to be done. Do things that are gonna increase the rent. That way you can get a better cash flow. I'm in the bathroom. Things in the bathroom, things in the kitchen, especially make those two places look good. Invest in areas where people are gonna be moving. So that means look at city plans, see where businesses are looking to move, especially big businesses. See where they're going, because they're not just gonna go into random cities or random locations. They're gonna go where they think businesses are going, and especially look where young people are moving, places like urban cities and things like that. If you want to learn more about investing in seeds, what I call seeds are investments, I wrote an ebook called Get Rich or Sleeping Investing 101. It's completely free. I'm going to put a link to that in the caption so you can read that if you want. This talks the basics about investing, what it is, how it works, things like that. And so, yeah, I mean, this was a great deal. it was a great deal, partially because of the timing, right? I mean, the biggest thing about real estate is, or any investment for the matter, is timing. And so be patient, never chase deals. It can be like a little bit tough when the whole market, all the news, everybody's just saying, oh my God, prices are skyrocketing. All these people are making so much money and this and that. You have to buy now, you have to buy now, you have to buy now. That's exactly when you should not buy, because you'd be chasing the market. Don't chase the market. Let it go too high, and then let it come down, and that's when you want to buy. When everybody's saying, oh my God, the world's gonna end, run away, don't buy. That's when you want to start investing, because everybody's running away and you can get a much better price. And so then you want to look at the right location, and then do these things to help boost the property values, increase the rent, and create your cash flow statements based on cash flow. Don't base your investment just on appreciation. You saw what happened in the mid 2000s and late 2000s with the crash, right? I mean, we're very lucky, very fortunate to kind of get involved after that, but learn from what other people's mistakes were. So yeah, I wanted to share this video with you guys to kind of show you some things that I did do right, because I learned from that deal before. Oh man, that nightmare deal. I'm so glad I sold it. But yeah, so we're about to get this property right here leased out. It just been vacant, so we should have this leased out pretty soon, and I will keep you guys posted. What's up everybody? If you enjoyed the video, hit that thumbs up button. Don't miss our new videos on entrepreneurship, business, and money every single week. So hit that subscribe button, or hit this button right here even if you're on your phone. Follow me on Snapchat and follow us on Instagram over here. And check out some of our latest videos by clicking these buttons below. And as always, keep hustling.